Hi, welcome once again to the session 5 of Auditing 304, Audit Planning. I hope you remember the phases of auditing. The first one was client and engagement acceptance, and the phase 2 was audit planning. So we are looking at audit planning. To perform any task effectively, one needs to plan at work. Planning is the process of thinking about and organizing the activities required to achieve the desired goal. Auditors need to plan to effectively execute the auditing process. This session will introduce students to the second phase of audit process, planning and controlling the audit. At the end of the session, the student will be able to discuss audit planning and its importance, describe the preliminary engagement activities involved in planning and audit, understand the entity and its environment in the relation to audit planning, explain materiality, discuss the role of materiality at the planning stage of the audit. The session will follow these outline. Read that chapter 6 of Auditing Assurance Services in Ghana, the key recommended text for this course, and any other audit and assurance textbooks that will be available to you. Auditors perform the following activities at the beginning of every audit. 1. Perform procedures regarding the continuance of client relationship and the specific audit engagement. Evaluate the compliance with ethical requirements, including independence, and also establish an understanding of the terms of engagement. Auditors plan the audit so that the engagement will be performed in an effective manner. So planning an audit involves establishing the overall audit strategy for the engagement and developing an audit plan or an audit program in order to reduce audit risks to an acceptably low level. Planning involves the engagement partner and other key members of the engagement team. Planning is not a discrete phase, it's a continuous thing, an iterative process that often begins shortly after the completion of the previous audit and continues until the completion of current audit engagement. What are the planning activities then? The overall audit strategy, very important. The audit plan or program, changes to planning decision during the course of the audit, direction, supervision and review, documentation, communication with those charged with governance and management. So under planning, these activities are very important that the auditors should pay attention to. So I'll entreat you to read more about these planning activities in the recommended text, chapter 6. What are the steps in planning the audit? The first is to obtain an understanding of clients, business, and industry. At least you should understand the activities of the client and the industry it falls in. Perform certain analytical procedures to help you put things in place. Make preliminary judgments about materiality levels. Consider audit risk. Develop audit strategies for significant assertions and obtain understanding of clients' internal control structures. What is planning therefore important in auditing? Yes. Adequate planning helps to ensure that appropriate attention is devoted to important areas of the audit. Planning the audit engagement ensures that it is properly organized and managed in order to be performed in an effective and efficient manner. Adequate planning also assists in proper assignment of work. Remember we said we work in a team. So the assignment of work needs to be done during planning. It facilitates the direction and supervision of members of the engagement team. It also facilitates the review of their work and assists where applicable in coordination of work done by other auditors. Let's try. The first point is that we should understand the entity, the industry, and the business of the entity, that is the environment. Understanding the entity means gaining knowledge of the entity. A good understanding of the entity allows auditors to form a good frame of mind about the engagement and about the nature of accounting and reporting. Auditors obtain an understanding of the entity and its environment, including its internal control, sufficient to identify and assess the risks of material misstatement or financial statement, whether due to fraud or error. and sufficient to design and perform further audit procedures. So understanding the environment helps the auditor to understand and know the best possible way to achieve the goal of the audit. Obtaining an understanding of the audit and its environment is an essential aspect of performing an audit. There are several benefits of understanding the entity, and I will entreat you to read more on it. What are the specific areas that should be looked to? That is industry regulation and other external factors, including the applicable financial reporting framework. Trying to understand the audit, you have to know more about this. The nature of the entity, including the entity's selection and application of accounting policies, objectives and strategies, and the related business risks that may result in a material misstatement of financial statement, measurement and review of the entity's financial performance, and most also importantly, the internal control. Need to understand how it works. Now, covering the planning, there is also important that we pay attention to materiality. What then is materiality? Basically, we're saying that it is a concept used for distinguishing between a trivial from important. That is, what is material, what is not material. The standard, that is International Standards on Auditing 320, explains a material item as an item of an information or an aggregate of items as material if it's probable that its omission or misstatement would influence the decision of users taken on the basis of financial statement. Materiality, therefore, has a role to play at two main stages of the audit: the planning stage and the reporting stage. There are two main levels of materiality that needs to be considered: at the overall financial statement level and at the individual balances and classes of transaction. Materiality, there is an inverse relationship between materiality and the level of risk. This will be understood more when we pick the topic audit risk. As a rule of thumb, there are some estimate or percentages that auditors can use to come or decide their materiality level. But one thing you should know, that it is the judgment of the auditor to choose whatever that best fits them. But they look at the risk level to decide the materiality level. So these are rule of thumbs that can be paid attention to, but don't forget that it is not compulsory. It is not fixed in stone. The materiality level is decided by the auditor. We say that an item may be material if arises from an item incapable of being measured precisely or from an inherently imprecise estimate, conceals a change in a trend in earnings, hides a failure to meet analyst expectation, changes a loss into income or vice versa, and so many points. So this brings us to the end of audit planning session 5. If you have questions, you can consult me on Sakai. Have a great day.